You're watching Trade of the Week with me, Zinati Quma. This week, the JSE's Anglo American Platinum and Sanlam, along with the New York Stock Exchange's Edison International and Walmart, are in for analysis. Unum Capital's hedge fund manager Loyiso Mpeta joins us now with his take of the stocks. Thank you so much for your time, Loyiso. As we go through the technical picture of two JSE stocks and two US listed stocks, let's actually start off with the PGM counter. It was a year, I think more than a year and a half since you last spoke about Mpeta, and a lot has happened since then. Looking at the picture of the PGM prices, we are still in a down cycle there, and also some of the separation efforts by its parent Anglo American. What has that picture looked like since then?
Yeah, so it's amazing how time flies, but very little changes in terms of the fortunes of a company. So this is one of those examples where even though a stock may look like it's bottoming, you can never really pinpoint exactly where that bottom is going to be. So as much as we try to forecast and build conviction, the one thing that is always independent of our forecast and analysis is the time factor. So if you get it wrong and you get your timing wrong, you can be in for quite a ride.
And so many people have called a bottom on this stock, PGM prices.
I can imagine. So just to recap, the last time we touched on Anglo Platinum, I emphasized from this all-time high that this very strong sell-off was for wave A. We had this bit of a big bounce for wave B, and the stock was now unfolding as a zigzag with the C wave of the zigzag currently in its fifth wave. Now, back then, I was already confident that we are closer to a bottom than we've ever been, because I'm looking at the fact that we are in the fifth wave of the C wave. But as much as there hasn't been too much of a change in price, we can see that from when we looked at it and now looking at current price action, the stock was trading at around 850 odd, and we seem to have some form of a bottom at 506 Rand. So the stock hasn't sold off aggressively from when we last touched on it. But you can see that in that year and a half, the stock has pretty much been trading sideways, though the trend has been downwards. Now, from a wave perspective, what am I seeing? I'm still holding that original view of the C wave unfolding as wave 1, 2, 3, 4. Only now the fifth wave, I am labeling it as an ending diagonal, also comprised of 5 waves. So the ending diagonal is really a pattern, a terminal pattern, but one that tends to consume a lot of time. So that's what we've actually seen in Anglo Platinum. So I'm more confident than I was the last time we looked at it, that a bottom is probably in place at 506 Rand. Of course, we never speak in exact language. We always speak in probabilities, but the conviction is much higher now that a bottom is probably in. What other technical indicators do I have that a bottom is probably in? So if we go back to March 2020, after that very strong COVID-19 sell-off, and we look at the candlesticks price action right here, and just to give an exploded view, if you project a price zone from the close of this candle and this one's open and the low of this week, so a week is this lower part of the candlestick, and you project that horizontally, you have a very strong support zone. So whenever I speak of support and resistance, I always say don't focus on a specific price, but look at a price zone. So if I look at this price zone and you look at where this candlestick, which I'm currently labeling as a potential bottom, it is bouncing off that support zone. And also when you look at it from a MACD perspective, now a MACD is a momentum indicator. So what we have with the MACD is what is known as double convergence. So with convergence, what you have is you have price making lower lows, but the MACD indicator makes a higher low. Likewise, again, price makes lower lows, but the MACD is making higher lows. That means that the selling momentum is declining. And there's a maxim in technical analysis that momentum precedes price. So a change in momentum technically occurs before we see an actual reversal in price itself. So that's what the MACD is indicating to us here. And also staying with the MACD, we can see from this wave B peak where the MACD broke just above the zero line. Now the significance of this zero line is when the MACD is above the zero line, we can say that the stock is bullish, but when it's below the zero line, it's still bearish. So throughout this entire C wave, we can see that the MACD has always been below the zero line. But in these last two instances, it tried to break above the zero line, got rejected, pulled back, went back to retest, rejected, pulled back. But now it's still very early days, but it seems as if the MACD now wants to break above the zero line. So from a technical perspective, I think Anglo Platinum is one to keep an eye out for. Like I've always said, I build conviction in stocks based on technicals long before the fundamentals line up.
I can see that, and really it just really emphasizes the importance of technical analysis, because the rest of us are looking at the fundamentals, we're looking at the price and not actually seeing the kind of momentum indicators that you see there with the MACD indicator. So
100%.
very, very interesting. Let's get on to our second stock on the JSE, insurance, Sanlam. From a fundamental point of view, Sanlam seems to be one of the outperformers in that insurance sector. And of course, they've continued to strengthen their position in that sector through diversification, really just emphasizing their competitive edge. But does the technical picture align?
No, it aligns beautifully, and you know it's really been business as usual for Sanlam. And the last time we touched on it was last year, late April. I think it was just after the GNU announcement, that big rally that we had. And I emphasized that from this March 2020 low, this bigger structure, it's a wave 1 and A, B, C for wave 2, and we are currently in this higher degree, wave 3 in blue. But within this wave 3, we are currently in the 5th and final wave of this wave 3. But then I even took it a step further and I said this 5th wave also looks to be unfolding in 5 waves. And what we can see currently is wave 1, 2, 3. So I was forecasting a pullback for wave 4 and a further advance to complete wave 5, but only of wave 3. And then we should still anticipate another correction for wave 4 and a further advance for wave 5. So I was still very bullish on Sanlam. So diving deep to where we were, this is that wave 1, wave 2, wave 3, and the pullback for wave 4 that I forecasted, and an advance for wave 5. And that's exactly what we got. So this is the 1, 2, 3. Here's the wave 4 that I was calling, and the 5th wave, which unfolded as an ending diagonal to complete this wave 5. So the question now is, we have a bit of a pullback, which has found a bottom at 79 Rand 17 cents. So the question is this the bottom? Can we now start buying Sanlam again for that higher degree, wave 5? So looking at the bigger picture again, we've got this wave 1, 2, 3, 4, and now this 5th wave is complete for a higher degree, wave 3. So this correction, is it all of wave 4? Now it's interesting when you look at this wave 4 in relation to this wave 2, because this wave 2 took a lot of time. It's a very big pattern, and also quite a deep retracement from where wave 1 peaked. So when you look at it in perspective in terms of price and time relationships, currently this looks very, very small in relation to wave 2. But we do have a phenomena in Elliott wave that is known as alternation, meaning if wave 2 was large and complex, wave 4 can be simple and small.
All right.
But this 4th wave can still drag on for a while. I think looking at how strong this rally has been from December 2022, I wouldn't be surprised if the stock consolidated a bit longer before resuming the uptrend. So again, this is where uncertainty kicks in.
Okay.
But the medium to long term view is still one of, we still need to complete this fifth wave. So the outlook is still bullish. It's just a question of how aggressive are you as a trader or an investor. But that being said, if you are aggressive and you want to jump in on Sanlam now, then I would use 79.17 as a stop loss level. But from a technical perspective, still more upside in Sanlam.
Okay. Well, let's cross on over stateside. And this is the first time that you're looking at the company Edison International. What does it do and what caught your attention?
You know, the interesting thing with the US, and this is something that's very fascinating about America and its utilities sector, which is very different to South Africa. The US, when it comes to water, electricity, most of the country is supplied by private companies. And most of those private companies are listed.
Okay.
So...
And this is one of them.
And this is one of them. Now, I think everyone knows about the wildfires that decimated that suburb in LA. I forgot its name now. So I was actually scrolling on Twitter, just on X, and I saw a headline that said Edison taken to court because of the wildfires. So I was like, okay, what's going on here? And I just did a quick read, and it turns out that this company is the one that was doing the electrical reticulation of that suburban area. And there's accusations, claims that their electrical reticulation was faulty. And that could have been what caused the fire.
Oh, so I can imagine then there was, investors were spooked because of that. Investors
were spooked because of that. So the question now is, how has that spook played itself out in the charts, and are there any opportunities? So if we look at Edison International going way back from when it was listed, we can see that it's a counter that generally has very, very aggressive sell-offs when it corrects. So this is this one that was driven by the fires, but you can see it's within sort of like the historical trend in terms of the size of the correction. So the question now is, what am I seeing? Are there any opportunities? Is this a stock worth looking at? So when I look at this sideways movement, we can see a very wide range, but generally sideways movement since November 2017. It took me quite a while to come up with a wave count for this, but and it's a very, very complex flat pattern. But I see a typical ABC for wave A, another ABC for wave B, then a very strong sell-off for wave C. But this ABC is only for a higher degree wave A, and then we have a leading diagonal wave A, a correction for wave B, another move up for wave C to give us wave B. Now we can see this wave B terminates above the starting point of wave A, which then gives us what could be unfolding as an expanded flat. And currently, I'm looking at this sell-off as part of wave C. So currently as wave 1, 2, 3, and this bounce, I'm labeling it as wave 4, and I'm forecasting one further sell-off for wave 5 to complete wave C. So we can see this entire sell-off for this wave 3 is when the news broke out of the wildfires and the claims and everything that spooked investors. So this is where it comes in. But you can see that the stock has been in a very corrective structure long before that. So, so I'll be looking for one more sell-off, probably back towards where wave A terminated around $43.63. And from there, I think the stock will catch a bid. Now, if I've missed a wave here somewhere, and this is all of wave C, and giving us what is known as a running flat, where the C wave doesn't terminate at or below where wave A terminated, then $49.06 will be the low. But my preferred wave count is for one more sell-off. So again, the important thing here is to put the spooked investors and the sell-off in context of the bigger picture.
Exactly.
And that's just how markets work. So even though there could still be more investigations, more lawsuits, always look at the chart and see how the chart behaves and put all of that in context.
And playing the technicals rather than the fundamentals.
By the what? And I don't know if it's by the rumor, sell the fact, or whatever it is. But yeah, this is where technicals can sort of give you a heads up. Because at the end of the day, what matters is not the news, but it's how the market process the news. And that's what and that's what's important.
All right. Well, we've had lots of news of recession fears in the U.S. And, of course, focus there is the U.S. consumer. And Walmart is, of course, a big retailer in the U.S. What's that technical picture looking like?
So Walmart is very interesting. We just looked at a counter that has got very strong sell-offs. And now we're going to look at one that is very resilient, very defensive. If you look at Walmart going back to the 80s, look how shallow its corrections tend to be. And this is a monthly chart.
So the opposite of Edison.
Total opposite.
Literally, yeah.
So when you look at these corrections, $11, $9, $14, this correction from the all-time high has been $21. And it's the biggest correction that we've ever seen in Walmart. So that's how defensive the stock is. So the question now is now a good time to buy Walmart? So to get a proper analysis in, I had to look at this correction on the 1 hour chart. That's how much detail I had to get into. And when I look at it, it's a very straightforward textbook. 5 waves down for wave A, a bounce for wave B, and another 5-wave sell-off for wave C. So I'm looking at this correction as an A, B, C zigzag. And again, putting it into context that this is the biggest correction we've seen in Walmart ever. It's quite a significant correction, even though it's only a $20 correction or a 20% correction, but in context, it's a significant correction. So I believe now is a very good time to buy the dip. This is a classic buy the dip. In a very defensive counter, and invalidation level at 83, 87, I think it gives a very good risk-reward setup.
I mean, and fundamentally, we are also still seeing health in the U.S. consumer. Yesterday, we got retail sales seeing growth there. So even with all the recession alarms, it seems that the U.S. consumer is still doing.
I don't think there's actually much of a recession alarm. I think most of it is just economists building too many models in terms of how bad Trump can go with the tariffs worst case scenarios. So the U.S. economy is still very resilient. Fundamentals are still solid. It's just Trump being Trump. So
because also, Loyiso, I've been doing this for a number of years, and every year there are recession alarm bells ringing, and it never materializes. Thank you so much for your time and for your technical analysis today. That was Unum Capital's Loyiso Mpeta. That is all for this week's segment, but do stay tuned for lots more coming up right here on Business Day TV.